Okay, so tonight's agenda will be this. Because we're talking about channel lines and trend lines, I'm going to talk a lot about support and resistance, because that's really why a lot of people use trend lines and channel lines. So obvious reasons, we're going to have a quick introduction into what support and resistance is. Okay, then we're going to talk about what are trend lines. Then we're going to go on to what are channel lines. Then we're going to discuss how some traders use support and resistance to trade. Okay, then at the end of the session, like all these sort of sessions, we'll do a question and answer session. You can ask me any question you like, and if I know the answer, of course, I'll answer it for you. Okay, so if there's any questions as we go on, please try and keep them to the end, so we'll go through them one by one. Okay, let me have a little sip of water. It is water, trust me, it's just water. Anyway, so what is support and resistance? Because this is going to come up throughout tonight's webinar. I thought it would be a good idea just to go over the basics of what support and resistance actually is. Okay. Now, support is a level where an asset could fall to, and the market starts to buy in again, pushing that asset up. So it acts like a trampoline. Something falls to it, hits, and bounces back up. Resistance is the opposite. Resistance is a level where assets could rise to, and the market will start to sell from. So it acts like a ceiling. Now, traders study support and resistance levels, okay, and try and identify what the potential support and resistance levels to engage potential levels to either enter the market or exit the market, or to set their stop loss or take profit at. So that's why people are trying to find the support and resistance. That's what they're looking for. Now, at times, when either the support or resistance is indeed broken, what they then tend to do is they change roles, i.e. the support becomes the resistance and the resistance becomes the support. This is often how many people see or try and engage if a level is broken, if this actually occurs. Because we all see it, a market can drop underneath a certain support level, resistance level, come back to touch it, and like I say, it changes roles. Now, that's a little introduction to support and resistance, because again, we're going to talk a lot about that, bring that up throughout tonight's webinar. So, question, what actually is a trend? Now, wouldn't it really be easy, or wouldn't life be easy, if the market just did this, just go straight up, nice and easy, or if we're short selling or if we're bearish, go straight down? It'd be easy, wouldn't it? But it doesn't do that, does it? Instead, what the market does, it does like little steps, like a zigzag, up, down, up, down, up, down, or down, up, down, up, down, up, down, if it's on a downtrend. That is how the market moves if it's only on an uptrend or a downtrend. Okay? It doesn't move in a straight line, otherwise it would be really easy. It doesn't do that, but this is what it does. Now, trend lines is a line connecting, excuse me a second, it's getting a bit hot in here. A trend line is a line connecting two or more lows or two or more highs to indicate potential future price movement. Now, the theory is that if you see two lower lows and two lower highs, potentially that asset is on a downtrend, as in going downwards. Okay? Whereas if you see two higher highs and two higher lows, this potentially indicates an uptrend. So traders use trend lines to identify if an asset is on an uptrend or a downtrend, and to spot potential areas of interest. So as we've already established, the market tends to move like this if it's on an uptrend, downtrend. Okay, it goes up, down, up, down, up, down, like steps, like a pair of stairs, like steps or stairs. Okay, so the idea of the trend line is connecting these lows here. Okay, so remember, 2 higher highs or 2 lower lows predict an uptrend. So my little sort of poor illustration there is sort of representing an uptrend. So the trend line is a line we do to connect the bottom to A, to show us if it's on an uptrend or downtrend, and potential areas of interest. Now, this here is the cable, the British pound, US dollar. Okay, it's on an hourly time frame. So if I get my little laser pointer pen here, okay, let's have a look where I would potentially draw the trend line. Okay, so we're looking realistically at the bottom. Okay, so clearly if we're looking at this on an hourly, we zoomed out and have a proper look at it, it's clearly looking like it's going on an uptrend currently as it looks. Okay, because let's say so we've got lower lows and higher highs. Okay, so it clearly looks like it's going on an uptrend. So the theory is, okay, the question is, again, this is why there's no wrong or right answer, it's just theory. Where would you draw the trend line? Now, some people would say, I would probably draw it at this stage here. But, as you'll find in one of the rules, it's too sharp. It's too sharp, it's too, it's not straight, it's too dramatic. So realistically, looking at it, this is where I would draw the trend line, from here to here to here. Because as you clearly can see, these are the areas where the cable has reacted. This is the areas where it's come down around the trend line area and the market has bought back in again. So bought back in, as we can see, every time it's approached the trend line, bang, the market's bought back in, showing that that trend line is indeed acting as a support, like a trampoline, like we said. Okay, so this here, trend line all the way up, so we'll connect it. And the idea is, obviously, it's great seeing the past history, James, but we want to see where the areas of interest are in the future by drawing the trend line. Well, here, this is the area we'll be watching for potential interest to see, again, to see if the support could potentially hold again and present us with potentially, possibly buying in entry levels. Okay, now, what we then tend to do, okay, well, like I say, there's a big common theory of the technicals as well. The more a level has been tested, the stronger that level potentially is. And as we can see, tested there, tested 3 times. And around this area here, it held quite substantially. So clearly, obviously, this is the area of interest we'll be keeping an eye on. Now, what we could also then do, once we decided what we see with our eyes and where we see the potential trend line being, to back ourselves up, we can then look at a longer time frame to see if we are around the ballpark figure. Now, this is a daily, and as we can see, the trend line, again, similar to the hourly trend line, is actually then indeed acting as a support around that. So again, it's representing that indeed, currently as it stands at the moment, the cable is testing on that trend line. So we are looking at the cable being somewhat on an uptrend. And again, to double check to see if our conclusion is right, what we can then add is a simple moving average. Okay, like we have here. And as you probably know, a simple moving average, the theory is if the asset is trading above the simple moving average, uptrend. If the asset is trading below the simple moving average, it's a downtrend. So as we can see here, it's been above, so uptrend. When it has come down, again, it's reacted off our trend line and bounced back upwards. As we can see here, again, came underneath the simple moving average, the trend line held, and again, dropped under the simple moving average, and again, the trend line held, and simply now the asset's above the moving average, highlighting again, indeed, currently this asset is potentially on an uptrend. Again, of course, obviously, we can use it as a downtrend indicator as well. So when an asset's on a downtrend, we can use the same trend line to look for potential areas of interest and potential areas of resistance. Now, this here, this currency pair is the dollar Swiss franc, actually, I think I chose here. Again, got our down, our trend line here showing a downtrend. And as we can see, obviously is held level around the resistance. That has indeed acted as a resistance. So that's our downward trend line, indicating that indeed the trend line is downwards. This is on a daily chart again as well, and the trend line is currently acting as a potential resistance. Now here's the rules though when you're drawing trend lines, okay? Number one, trend lines can only be drawn when there are at least two tops or bottoms. Okay, two tops or bottoms. Like I say, if we go back to my example here, if we go back to, where's my one here? If you go back to this one here, the cable, top, top, bottom, bottom, top, top, bottom. So there we go. This is what I mean by that. So it can only be drawn when you're seeing that. Okay. At the same time, okay, the steeper the trend line, the less accurate it will be. Go back to my example again. Go back to the cable. Now remember, we were talking about maybe drawing the trend line up this way, but that would be far, far too dramatic, and clearly he's not giving us enough, pure information to see whether or not it's holding. So the steeper it is, or the most dramatic it is, the less, more unlikely it will be accurate. And number three, trend lines should not be forced and should be based upon what you see, not what you want. Okay, so again, it's going to only be seen with your eyes. Now, introducing channels. Now, as we said, trend lines are drawn to either look for potential support or resistance. Channels can be used to look for both. Now, there are three types of channels, okay? Ascending, which is an uptrend. Descending, which is a downtrend. Horizontal, which is a ranging market. Okay, now I'll go through all of these. Now, here we go. We got the British pound again, the cable again. I'm a Brit, so I'm going to talk about it. Now, this is here. We got it. Get it's on it's a daily chart. So we'll have a look here at potential channels. We can see. Remember, so a channel we're looking for, where potentially giving us a hint of where the resistance and support is, so we can trade it that way. So let's have a look. Let's have a closer look. Okay, my eye, I can see two channels here. This here connecting here, uptrend, and here, another trend. So this is the channel. So as we can see, it's trading in that channel. We've got another channel here as well, I can see. It's trading between this channel. So as we can see, every time it's touched the bottom, it's bounced back upwards on this channel. Every time it came close to the upper channel line there, it started to be sold off again here, and so on. Market starts to buy in again. So again, the support is acting as a support. Up at the top, again, support is acting as a support. And as it comes around the channel line there, it starts to sell off again. Okay. Finally, it's broken around about this level here, and then it invents another channel. It trades between here and this level. So it comes down to this channel line here. Market starts to buy in again, comes to the top channel line there. Market starts to sell off again, hits the bottom channel line there. Market starts to buy in again, and so on. Okay, so that is how we try to identify the channel lines. Well, if of course we're looking to maybe swing trade, we trade between those two levels, or again, like I say, if we're longing or shorting, we know roughly where to set our potential take profit or stop loss. Let's do another example. This here is the Euro British pound. Okay, again, we've seen a nice, very pretty nice channel line here. We've got this here again. At this stage, it was on an uptrend here. Okay, and then of course, obviously there, we got the potential level where the market is telling us where the market is selling again, and as we selling from, as we can see, as it hits and trades between those two levels, indeed, the market is selling off. This point here, it tests it, and though it does indeed bounce back up again, eventually breaks the channel, and it comes into a new direction there. Horizontal. Okay, horizontal channels. This is, of course, when the channel is trading with two levels. Okay, again, this is a daily. This is the I think it's dollar Swiss franc. So we have our bottom channel line and our top channel line. So remember, the theory is the bottom channel line is going to act as support, the top channel line is going to act as a potential resistance. And as we can see, comes up to the top channel line, market starts to sell off, comes to the bottom of the channel line, market starts to buy in, top of the channel line, market starts to sell again, and so on, until this point, the line is broken. Now, question a lot of people ask me is, when can you tell if a line has definitely been broken or not? Now, the theory goes, excuse me, is if, or some people believe that if you see a candle open and close above or below a support or resistance, okay, that indicates that level has potentially been broken. There is other schools of thought as well. Now, we look at this bit here, excuse me, my mic here, you look at this bit here, okay, obviously opens and closes, but this candle is having a nice little pattern. It's a pattern called the falling star, which is like the little red here and the long tail here, showing that though it did potentially break it, the market or the bulls weren't there to break it properly. So guess what? The market came back down again, and indeed then that top channel line again became a resistance. And again, around the bottom channel line, the market started to buy in again. Round the top channel line, the market started to sell again, until eventually it broke. Okay? And again, going to the question again, and so we'll go on to the theory of what I just said earlier on, support becomes the resistance becomes a support. As you can see, this is broken because it closed underneath it, but it then reached up to it, tested it, and that support, which was a support all the way along here, then became a resistance. And indeed, the market started to sell off, and indeed, of course, that channel had been broken, and the market started to go towards more of a downtrend. Now, sorry, a little swig of water. Lovely. Okay, so we're talking about support, we're talking about trend lines and channel lines, but how do some people use support and resistance to trade from? Now, there's several techniques, but these are a couple of some of the techniques people use. First of all is known as the bounce. They wait for something to come down to, say, a support and resistance. As soon as it touches and it bounces up, that's when they jump into the market, setting their stop loss just below that level. Okay, so it's the bounce. Others, they look for the break of the level, and that's when they jump into trade. And there's two schools of thought when you're doing this. One is known as the aggressive. Okay, the aggressive. With this, what happens is when a level is broken, the aggressive traders out there, what they do, as soon as they've broken in, they jump in and they sell, waiting for it, you know, setting a stop loss just above it. So they jump in straight away as soon as they see a level has been broken. Others are what's known as the cautious traders who trade on the break. They see the level, they see it broken, but they do not jump in. Instead, what they tend to do is they wait for the market to come back up, test that level to see if that level has indeed changed roles, i.e. the support becomes the resistance support. They wait to see if that's happened, and that's when they then jump in, setting their stop loss. Now, to go back to the visual chart again, if I go back to my chart here, this here would obviously be the cautious approach. The aggressive would have jumped in about here, but the cautious traders would have waited indeed to see if that support has changed roles, and then when they actually see it holding and acting in resistance, then they would then probably consider looking to jumping into the market. Now, this is like a brief introduction to channels and trend